Welcome to our monetary policy special. Well, the Reserve Bank today did not cut rates, but it clearly said that because of the sharper than expected fall in inflation, it gives them more space to cut rates going forward. Bond yields actually rose after the policy, obviously because there was no cut. But there are still two views on whether the RBI is likely to cut more than once, because the RBI very clearly said that it has, the lower than expected inflation allows space. It didn't say limited space. So there are those interpretations. More importantly, there were a bunch of steps that the RBI announced to remove constraints on banks in the process of giving loans. They can fund acquisitions, they can lend more to large groups, they can lend more to capital market players and against shares. But, let's first discuss the monetary policy issues. I have with me two economists, Samiran Chakrabarti of Citi and Mridul Sagar, a former MPC member and, of course, formerly ED with RBI. I also have with me Shailendra Jingan, who heads the Treasury at ICICI Bank, our bond expert today. Gentlemen, thank you very much indeed for joining me. Samiran, first up, I repeatedly asked the governor, you're not saying limited space to support growth, you're saying space to support growth. Should we interpret that there is more than one cut in the offing?
So I think in our view, we are now firmly in a wait and watch mode. Whether the space is going to be available in the December meeting also will depend upon a lot of macro and external factors which can play out between now and December. We have to see how the GST cut is going to play out in the festive season, how it's going to play out over the next couple of inflation prints. And then we have to also see how the growth numbers are responding to the tariff-related issues. So that way, when RBI goes into December, it will probably have a better idea of whether that space still exists, because as the governor and deputy governor has repeatedly mentioned, that monetary policy is forward-looking. So in December, when RBI will be looking at 1 year ahead inflation forecast, that's for December quarter 2026, their current forecast is of CPI at 5.1%. It's partly due to base effect, but to communicate a rate cut based on real rates argument in December might become more challenging. So in some sense, one can argue that unless there is space for at least 50 basis point of rate cuts, or unless the growth shock is more significant, the RBI might have to go for a more longish pause at a relatively low interest rate and extend the cycle rather than going for deepening the cycle.
So at the moment, you're not expecting a cut in December?
We are on a wait and watch mode.
Okay, fair enough. My experience so far, and it would be yours as well, that the MPR, Monetary Policy Report forecasts have less significance. When they enter the monetary policy statement, they become more significant. In the past, those forecasts are there, but they are not given that much importance. Mridul, would you agree? And if you want to take the MPR forecast for the fourth quarter is 3%. I mean, 3.9 or something, below the 4% mark. So, Mridul, again, same question, rate cut expectation?
So Lata, for a 1 year horizon, the MPR forecast match the MPC forecast. So there is no question that the two are different. It's only when it gives a 2 year forecast, obviously the uncertainty is so high that you have to give a lesser weight to that. But whatever the numbers they have put out, whether on the 1 year basis or a 2 year basis, the real policy rate looks very much in alignment with the neutral rate. Now, basically, this doesn't rule out a cut because if obviously growth falls and there is downside risk to growth, but the baseline looks pretty solid, we don't have it still in the data. I think Poonam Gupta beautifully put it in communication in the press conference when she acknowledged that Q1 growth surprised on the up, but recent weakness is there and inflation is giving some headroom for further cuts if it becomes necessary. I think we should take it on the face value of it and not try to firmly predict whether there would be a rate cut in December or not. There are lots of things coming up to December. The
No, but
situation will
okay,
become
not
clearer.
December, not December, but surely you see one rate cut ahead.
At best, one is
Okay.
with a high probability, but suppose we all mistake it and there is some global headwinds which are there. And if it percolates more globally, forget India. India can manage the shocks it is receiving with some downside on the growth. But if the whole things get pretty complicated in terms of asset bubbles forming and
Okay.
getting burst and putting growth down, you can have more than one rate cut. Nothing is stopping that.
Fair point. Okay, Shailendra, the market sulked. You saw the 10-year go almost to 6.6%. What are you all taking home?
So the market, Lata, was sulking till the time the RBI press conference started. I mean, post the RBI press conference, I mean, market, took a signal that, RBI is looking at bond deals. I think till now, the understanding in the bond market or the thinking in the bond market was that, that the transmission is working well through the banking channel and, through the cuts in the EBLR rates, etc. And GSEC market previously, when RBI was asked, I mean, there were other factors which were highlighted in terms of demand and supply. And today, I think there was some hint given by the governor that bond yields could be somewhat lower. So I think that was and they are considering certain things. I mean, of course, he spoke about about the auction calendar, etc., and the state loan supply. So I think that is where the bond market started taking a
Working
positive
up.
signal. Till the time, even when in the policy there were hints that one more cut, I mean a cut could be coming in the future, but that didn't move the needle for the bond market. So I think the bond market was looking at specific action to address the demand supply gap, and that came in the press conference. And since then, I mean, the yields are down by about 5 or 6 basis points.
Okay. Well, what did you make of the comment on the rupee, Shailendra? Normally, the RBI says, we only control volatility. This time, he seemed to show more concern and intent to intervene. Any takeaways?
So, no, our sense is that RBI is still, the data at least we have, since December 24, RBI has been more tolerant in terms of, the movement of the currency. And we think that that is likely to continue. But I agree with you that today was probably the first time that, we got a signal that, probably they won't tolerate too much of depreciation from here on. Because, I mean, if you look at even, some of the valuation metrics like RER, I think this is the lowest level. So we have come below 99 on RER. And this is the lowest level, I think, in the last 3-4 years. So in a way, I think probably they feel that a lot has happened on the rupee. But if the capital outflows continue, I mean we are seeing continuous outflows on the equity side. So I don't think they will stand in the way of some depreciation. But probably they don't want rupee to fall too much. I mean that's the sense we.
That was the take home. Samiran, what did you make of you referred to the inflation forecast. The Reserve Bank has been seriously overestimating inflation, which they themselves admitted. From 3.7, they have come down all the way to 2.6. And when I took a poll, the market is actually sitting at 2.4 or 2.5. That was the average I got in terms of this year's CPI. Going forward as well, 4.5% for the April, May, June quarter. There are still people on the street who are giving me a lower number. Do you think that we will continue to see actual inflation undershooting RBI forecast?
Just first answering the last bit of your question, which is a more technical one, is about this the Jan-March quarter forecast being suddenly up to 4% versus the 1.8% in the October-December quarter. I think it's because the market might be anticipating a similar drop in seasonal food prices that happens in the winter months. But this time, since the vegetable prices did not go up as much during the summer months, the decline might be much lower. And maybe RBI has factored that into their forecast, and that's why getting a slightly higher inflation number for that quarter compared to the street. But I think the bigger question is about this sustained over estimation of the inflation numbers in the last few years, vis-a-vis a sustained underestimation of inflation during the COVID and the Ukraine war periods. So, one possibility is that there is always this adjustment bias that forecasters have, and RBI might now be adjusting a bit more on the downside. So, what I'm hinting at is that this year, particularly, we have seen globally, particularly in Asia, a significant lowering of inflation numbers across countries. So next year, if on that low base, if inflation starts picking up everywhere else, then we could also be impacted by that.
Oh.
And similarly, all the stimulus that we have given this year, if the stimulus, they have their intended result in boosting demand, then one can obviously expect that to some extent the inflation momentum will pick up also. And on top of it, we have this very peculiar situation where next year we're going to have a completely new inflation index.
Exactly.
So, because of all this, forecasting inflation so far ahead now is becoming notoriously difficult. So, I have full sympathy with that view.
Okay.
But yes, it is going to be a challenge for RBI even in the December policy, that how much emphasis do they put on this 1 year ahead inflation forecast vis-a-vis looking at more near-term inflation dynamics, and then take a call on the real rate.
Got it. Actually, out of time, the SBI chairman will be joining in shortly. Mridul, a very quick question. Do you think the Reserve Bank will also be conscious that the real GDP looks good because of technical factors like, you're deflating 60% of the inflation with WPI? So actually growth is not so good. Do you think there is an underlying admission there, but they can't say that I don't trust the GDP?
So obviously everyone knows where the problems of statistics lie. And by maybe January or February next year, we'll have clarity on these numbers when new series for GDP and IIP following that would come in. But on the inflation, let me say that the RBI has reduced the Q4 forecast from 4.4 to 4%. So in a sense, they're also sort of correcting that bias upward, which existed earlier. Now, we don't know exactly how much confidence to give, but they have given confidence interval bands for the last quarter.
Yes.
And that really shows that there is uncertainty about that inflation. Now, the issue is, do we factor it into policy right away? And RBI clearly communicated with 2 cuts in June that they have done what they needed to do. And they're standing by that. And probably a reassessment could come in December. Yes, between the GDP and GVA, there is discrepancy. So that's well known. But even the GVA growth is not so bad.
Yeah, that's true. No, that's true. I mean, I'm not saying it's bad at all. In fact, it's very good. They have advanced CapEx plans, the government, they have advanced exports. So the number is good. It is just that, is it 7.8? That was the question, really. Okay, gentlemen.
In addition, it's the financial regulation side. They have supported growth in lots of fashion.
Absolutely, and that's what I'm going to discuss.
And in fact, I'm worried whether our supervision of the RBI will rise to the occasion to see that the new system works well.
Okay, well, actually, let us ask the SBI chairman those questions. Samiran, Mridul, Shailendra, thank you very much for joining me. It had to be quick because this is really a credit policy. It's a banking policy and probably less a monetary policy. So those questions to the SBI chairman in a minute after the break. Thank you, gentlemen.